Hi, this is Zach Meir with a weekend edition of the Bulletin Board Heroes. It is Saturday, the 23rd of July. Starting off with the Ftse 100, where we're in a little range either side of the 50-day moving average. That's around, 73.05, something like that. Closed below that, which is slightly disappointing to end the week, but still in the sort of zone in terms of potentially building higher. Initial target here up to the 200-day moving average, currently now just shy of 73.60. It's good that that's rising, gives us upward momentum. We've also got the RSI in the low 50s, which is above the neutral 50 zone, so that's in theory on the bull side of the oscillators range, so that's all good. And really, while we're above 71.70 in the broken June resistance line, the upside is potentially up to the 200-day line again. Nightmare scenarios that we break the 2-year uptrend line around 7100 now, but we've tested that several times over the last month and so far bounced back, so hope for the bulls at this stage. We get through the 200-day line and if they close through 73.60, then the unlikely scenario, I suppose, in terms of expectation, is that we then head up to post-February resistance and really 2022 resistance just above 7600. But the main thing here really is that we don't fall below that 2-year uptrend line. Going on to Bitcoin, we were still waiting to see what the next big move will be. We've been in a consolidation, 19,000, 22,000 most of the last month. Grazed the 50-day moving average there at just over 23,000. Above that line, looking for the old May support, 25,500 or so, and ideally we remain above 22,000 and try and build towards 25,000. Break of 19 would then get us down in the lower reaches of that falling March trend channel, so maybe 15,000 or even 10,000 by the end of that next month if we break 19,000. But at the moment, we were away from that imminent danger, although it's not great that there have been 3 or 4 failures over the last few days at the 50-day line. We really need to get through that 50-day line area and 24,000 plus to get this market out of danger. RSI in the upper 50s, which is in a good place, so really the break higher should happen pretty soon if it's going to happen at all. Moving along to the stocks of the day, and it's quite a few of them, although they're sort of middling ones rather than wow factor ones. But the first stock actually might be, in a way, the best one. We've got Allergy Therapeutics, which gapped down earlier this month, so gapped down from around the 16 pence area. And then we had an end-of-day close on Wednesday above or at that gap. So it's a gap close buy signal, which they can be very reliable indeed and very strong indeed, especially as you know that back below the floor of the gap would negate the signal. But basically 18 plus here, and we're looking at potentially not only the 50-day moving average around 21 pence, but maybe post-March resistance as high as 25 pence and coming up to the 200-day line, which is falling at around 26 pence. So potential gap close buy signal there, and coming off very oversold territory there. I think the RSI was actually down near the 0 level, so amazing. So should be a bit of a spring in its step for Allergy to rebound. On to a stock which I don't cover very much, and here we see that Eco Animal Health has also made a bit of a turnaround, a good key reversal higher on the end of the week or on Thursday, and then breaking that line of resistance there from October. That was around 112. And above that, we're looking for, I suppose, resistance on the way down, which was around the 150 level. So looking quite sprightly there, and also backed by bullish divergence. So the lower low for the latter part of July, but a higher RSI trace that is already kicking in, I think, in terms of providing momentum to the upside. We've also closed back above the old May support, rather, around 116. So that is also a bear trap reversal. So very nice indeed on 3 little points, I think 3 positive technical points. Moving on to ETX, which is also e-Therapeutics rather. Here we've broken the resistance line there from December. We did that a couple of weeks ago, then broken above the 50-day moving average around 18 pence, and now starting to accelerate. All the while that decline from May to July rather, backed by a bullish divergence line. So the price went lower, but the RSI went higher. So that's normally a good leading indicator, and we would be looking for the shares to at least get up to April-May resistance around the 27, 28 pence area over the next few weeks. Early back below the 50-day line now at 18 pence, really questioning the idea that this could be a decent turnaround situation. Stock which has been requested, and which requested a few days ago, which I didn't get round to, is Greatland Gold, and here we had a strong key reversal up on Thursday, held most of those gains, or a decent chunk of those gains, and closed above the 50-day moving average at 10.6 pence. Above the 50-day line, we're looking for the shares to get up to 14 or 15 pence by the end of next month, on the basis that there's been hopefully a lasting turnaround here. A bit of a bullish divergence there as well, so that's handy. That's always a good way of knowing whether something is just a flash in the pan recovery, or something which might actually have legs. So this looks like it's got legs off the back of that bullish divergence that's kicked in for June and July, over and above the key reversal to the upside on Thursday. On to Gildy Sports, which I'm very pleased with over the recent past. The technicals suggesting that at long last the shares were going to turn around. There was a bullish divergence there from March to May. So really from May, the stock was on watch in terms of a turnaround. Had made a final low there at the beginning of this month, like many stocks have, around 1.25 pence. But breaking that line of resistance there from January and gapping higher and holding the gap on Friday, a very strong signal. And obviously, if you add in the Coca-Cola factor, that's an even stronger signal. And so the view at the moment is really above the 1.5, 1.6 pence area. We're looking for resistance on the way down, which was back in February as high as 3 or even 3.25 pence over the next 4 to 6 weeks. So pretty encouraging look there for Gildy Sports now. Onto a stock which blipped higher on Friday, and don't normally just go for a one-day wonder situation, but might just be worth keeping an eye on IDE. It managed to close above the May resistance there around 1.25 pence. So the longer the shares stay above that, the greater the chance of a move to the top of that one-year rising trend channel at 2.2 pence for those who are interested in that kind of situation. Kazera is next, and it's another. So I suppose it's another stock in the Gildy Sports mold. So we had a gap high. Well, actually, we've had two gaps: double bear trap gap reversal. A bear trap reversal with a double gap higher, which is a pretty strong signal. The view now is that while we're above the second gap, around the 0.8 pence level, looking for a retest of 2022 resistance around 1.4, 1.5 pence. So very nice setup there with the bear trap, the oversold RSI, and holding those gaps higher as well. So probably Guild and Kazera, two of the favorite ones alongside Allergy in the sweep so far. Moving on to Nuformix, and here it's taken a while, the best part of a month, but we had a gap higher earlier this month. We've had another couple of gaps now, so that is pretty strong stuff. A saucer type reversal there, bullish divergence going into July, so that's positive. So we would be, I think, disappointed if the shares don't manage to get up to the 0.8 pence zone, which is the area where the shares gapped down from back in May. And that's valid while we hold above the 0.4 area. So two gaps up there as well. Pretty strong stuff, even though this is a very illiquid stock, and so gaps don't mean quite as much, but pretty handy there. On to Pensana, where maybe at long last the shares are ready to regroup. We've had higher lows for June and July, which is unlike many stocks. Most stocks, the June-July lows this year were the worst, so that's a positive. Neckline resistance there around the 73 pence level, but probably going by the view that above 69 pence in the 50-day moving average, the shares could head back to post-April resistance around 90 pence, with that basically what is a W-shaped reversal for the stock. On to Tirupati, which has been one of the stars of the past week, and certainly on a charting view as well. The view was that the shares could bounce off the floor of a descending price channel, a one-year channel, around the low 20s, and initial target was obvious, the resistance on the way down, which was 37 pence. Weekly close above 37 pence could take us up towards 50 pence maybe over the next 2 to 3 weeks, just to complete that zigzag. I suppose that we're looking at a copy of what we saw in November, December, or in terms of recovery here. So hopefully on this occasion we'll get up to the top of the channel, even though we didn't do it the other time. So above 37, looking for 50, and at this stage really back below around the initial July resistance at 32 pence, really delaying the recovery scenario for Tirupati. Moving on to Tintra, which is also emerging sort of quite a similar pattern to some of the other stocks we've seen. So breaking out of a falling wedge and then holding that. The level in question here around the 79 pence area. So above that, the initial target, obviously the 50-day line, but we could get up to the 200-day moving average around £1, around £1.30. We're backed by a bullish divergence line as well, so that gives us more confidence that the shares will head back towards that area. If you're cautious, maybe wait for an end-of-day close above the 50-day moving average at 102 before deciding to enter the fray. That's it for me today. Join me again during the week.